Hello, friends. If you receive Social Security and a letter arrives saying you were overpaid, do not put it in a drawer. Do not assume it will fix itself, and do not wait until your next check to see what happens. Under the current Social Security Administration policy, if you do not respond, the agency can automatically withhold 50% of your monthly Social Security benefit to recover the debt. For someone receiving $2,000 a month, that could mean a check of only $1,000. And the most important window may be the first 30 days after you receive the notice. Now, I want to be very precise, because there is a lot of misleading information online about this subject. 30 days is not the only deadline. In most cases, you have 60 days to appeal the overpayment decision. But if you file an appeal or a waiver request within the first 30 days, Social Security says it will not begin collecting while it decides your request. That is why acting quickly matters. The first 30 days can protect your cash flow. The 60-day period protects your appeal rights. Those are two different things, and confusing them can become very expensive. In this video, I am going to explain what an overpayment notice actually means, why these debts happen, how to decide whether you should appeal, request a waiver, negotiate a lower monthly withholding amount, or repay the balance, and what documents you should gather before contacting Social Security. Stay with me, because near the end I will give you a simple 5-step response plan that you can follow the same day the letter arrives. Before we get into it, subscribe and turn on notifications. Social Security rules, repayment procedures, earnings limits, and online services can change. On this channel, we separate the official rule from the rumor, explain it in plain English, and focus on the steps that can protect your monthly income. First, what is a Social Security overpayment? It means the agency believes it paid you more money than you were entitled to receive. The notice should tell you the amount, the reason, the months involved, how Social Security plans to recover the money, and what rights you have if you disagree or cannot afford repayment. An overpayment does not automatically mean you committed fraud. It can happen because wages were reported late, estimated earnings were different from actual earnings, a change in marital status or living arrangement was not processed on time, disability work activity affected eligibility, another benefit changed, or Social Security used information that was incomplete or incorrect. Sometimes the beneficiary did not report a change quickly enough. Sometimes the information was reported, but the adjustment was not made before additional checks went out. Either way, the letter must be taken seriously. The second thing you need to understand is that Social Security benefits and supplemental security income are not treated exactly the same. For a Social Security retirement, survivor, or disability overpayment, the current automatic withholding rate is generally 50% of the monthly benefit when a person does not respond. For an SSI overpayment, the standard recovery rate is generally 10% of the SSI payment. Your own notice controls, so read the proposed recovery section carefully instead of assuming that the rule you heard from a friend applies to you. Here is an example. Suppose Mary receives $1,800 a month in Social Security retirement benefits. She receives a letter saying she was overpaid $7,200 because Social Security believes her earnings affected 4 months of benefits. If Mary does nothing, a 50% recovery rate could reduce her monthly benefit by about $900 until the debt is collected. That reduction could affect rent, prescriptions, utilities, groceries, and insurance. But Mary has options. She can challenge whether the overpayment happened, ask Social Security to waive repayment, or ask for a lower recovery rate that she can afford. The correct option depends on what you are disputing. If you believe you were not overpaid, or you believe the amount is wrong, the normal path is a request for reconsideration. The form is SSA 56-1. Request for reconsideration. This is the appeal. You are saying, in effect, the agency's decision or calculation is incorrect. Please review it again. You should explain exactly what you disagree with and include evidence. For example, if Social Security says you earned $40,000 during a period when your actual covered wages were $22,000, provide pay stubs, a W-2 tax records, or an employer statement. If the agency says you did not report a change, but you have a confirmation number, fax receipt, certified mail receipt, online submission record, or dated notes from a phone call, include that information. A general statement that the decision feels unfair is usually weaker than a clear timeline supported by documents. The regular appeal period is generally 60 days after you receive the notice. Social Security normally assumes you receive the letter 5 days after the date printed on it, unless you can show that it arrived later. Your notice should explain the exact deadline and method for filing. If you miss the 60-day deadline, you can ask for more time and explain the good reason for the delay, such as hospitalization or another serious circumstance. But approval is not automatic. Do not rely on getting an extension when you can file on time. Now let us talk about the 30-day protection. Social Security says it will wait at least 30 days after sending the notice before beginning collection. If you request reconsideration or a waiver within that period, it generally will not begin withholding while it decides the request. If you file after collection has started, a pending waiver request can also stop withholding while the waiver is considered. But the safest approach is to respond immediately and keep proof of when and how you filed. The second option is a waiver. A waiver is different from an appeal. With a waiver, you may accept that an overpayment occurred, but you are asking Social Security not to collect it. Generally, you must show that you were not at fault and that repayment would prevent you from meeting necessary living expenses, or that recovery would be unfair for another recognized reason. The form is SSA 632BK, Request for Waiver of Overpayment Recovery. Social Security may ask about your income, bank accounts, property, monthly expenses, debts, and household circumstances. This is not a form to complete casually. The numbers should be accurate and should match the documents you provide. Necessary expenses can include housing, utilities, food, medical costs, insurance, transportation, and other essential obligations. Gather bank statements, rent or mortgage records, utility bills, pharmacy receipts, insurance premiums, loan statements, and proof of any unusual medical or caregiving expenses. The goal is to show what money comes in, what must go out, and why the proposed withholding would leave you unable to pay ordinary and necessary living costs. There is generally no time limit for requesting a waiver. But waiting can still hurt you because recovery may begin while you are doing nothing. That is why the practical message is simple. Even though a waiver may be requested later, file quickly if you need immediate protection from withholding. What does not at fault mean? It does not necessarily mean that Social Security made the original mistake. The agency can consider whether you understood that the payment was incorrect, whether you knew or should have known that you were receiving too much, whether you gave incorrect information, and whether you failed to report a change you were required to report. Your age, health, education, ability to understand the rules, and the information Social Security gave you may matter. A person who promptly reported wages and reasonably relied on the agency to adjust the benefit may have a different case from someone who knowingly continued to accept checks after being told that eligibility had ended. Do not exaggerate. Give a factual timeline and explain what you knew at each point. You can also request reconsideration and a waiver. These requests answer different questions. Reconsideration asks whether the overpayment exists and whether the amount is correct. Waiver asks whether Social Security should collect it from you. If you are unsure what caused the debt, Social Security's own guidance says you may ask for reconsideration, a waiver, or both. The third option is to request a lower rate of recovery. This is important for people who do not dispute the debt and do not qualify for a full waiver, but cannot survive on half of their monthly benefit. The relevant form is SSA 634BK, Request for Change in Overpayment Recovery Rate. You provide financial information showing why the automatic rate is unaffordable and propose a lower amount. Do not assume the 50% rate is the only possible repayment arrangement. Social Security states that flexible payment options may be available, and its public materials note that some repayment arrangements can be as low as $10 per month, depending on the circumstances. That does not mean everyone will receive a $10 plan. It means you should ask for a rate based on your actual ability to pay rather than accepting a reduction that makes it impossible to cover basic needs. Let us use another example. Robert receives $2,200 a month and owes an overpayment of $9,000. He agrees that the overpayment happened, but after rent, Medicare premiums, food, utilities, transportation, and medication, he has only $160 left each month. A 50% withholding rate would take $1,100, which is completely unrealistic. Robert should not ignore the notice. He should contact Social Security, request a lower recovery rate, document his necessary expenses, and propose an amount that he can consistently pay. The fourth option is repayment. If the calculation is correct and repayment will not create hardship, you may repay the debt using the method listed in the notice or arrange a payment plan. Social Security has expanded online repayment options, but you should begin from an official Social Security website or your secure account, not from an unexpected text message, email, or QR code. This brings us to scams. Real Social Security overpayment notices can create fear, and scammers use that fear. A caller may claim your Social Security number will be suspended, threaten immediate arrest, demand gift cards, cryptocurrency, cash, or a wire transfer, or pressure you to pay before you have time to read the letter. Those are major warning signs. Social Security does not suspend your Social Security number. Verify the notice by using the phone number on the official SSA website, your local office, or your secure My Social Security account. Do not call a number simply because it appears in a suspicious email or text. Now, what should you do on the day the letter arrives? Step 1. Record the dates. Write down the date printed on the notice and the date you actually received it. Save the envelope. Take clear photographs or scan every page. The letter may contain different deadlines for reconsideration, waiver protection, repayment, or a hearing. Do not rely on memory. Step 2. Identify the claim. Write down the alleged overpayment amount, the benefit involved, the months involved, and the reason Social Security gives. Ask yourself whether the facts match your records. Were you working? Did your earnings change? Did you report the change? Did you move, marry, divorce, or receive another benefit? Was the payment made to you or to a representative payee? Step 3. Request the calculation and your file if anything is unclear. You are entitled to understand how the agency reached the amount. Ask for a month-by-month explanation. A large total can sometimes include several separate issues, and you cannot challenge a calculation effectively until you know the inputs. Step 4. Choose the correct response. If the decision is wrong, file reconsideration. If the debt may be correct but you were not at fault and repayment would cause hardship or be unfair, request a waiver. If you owe the money but the proposed withholding is unaffordable, request a lower recovery rate. If you can repay without hardship, use an official repayment channel. Step 5. Create a paper trail. Keep copies of every form and supporting document. If you submit online, save the confirmation page. If you mail documents, use a trackable method. If you visit an office, ask for a stamped copy or receipt. If you call, write down the date, time, name of the representative, and what was discussed. Never surrender your only copy of an important document. There are a few mistakes I want you to avoid. Do not ignore the letter because you think the amount is too large to be real. Large overpayments can build up over months or years before the agency sends the final calculation. Do not appeal only because you cannot afford repayment. Inability to pay is normally addressed through a waiver or a lower recovery rate. An appeal should focus on whether the overpayment decision or amount is wrong. Do not request only a waiver when the calculation itself is incorrect. A waiver can leave the underlying overpayment determination in place. If the amount is wrong, protect your appeal rights as well. Do not send original records unless Social Security specifically requires them and gives you a secure process. Keep copies of everything. And do not assume that speaking to someone by phone automatically counts as filing a written appeal. Follow the instructions in your notice and confirm that the correct request was officially received. One more point. If you no longer receive Social Security benefits, the debt does not automatically disappear. Federal law may allow collection through a federal tax refund, certain state payments, wage garnishment, or future benefits. That is another reason to resolve the notice instead of hoping it will be forgotten. So let us bring this together. A Social Security overpayment notice is not the same thing as a final judgment that you have no rights. You may be able to challenge the decision, request that collection be waived, or negotiate a lower monthly recovery amount. But time matters. The first 30 days are especially important because a timely appeal or waiver request can prevent collection from starting while Social Security reviews your case. The usual appeal period is 60 days. A waiver may generally be requested at any time, but delaying can allow withholding to begin. For Social Security benefits, the default recovery rate can be 50%. For SSI, it is generally 10%. Your notice may contain facts or exceptions that change what happens in your case, so read every page and respond using the official instructions. If you remember only one sentence from this video, remember this: do not panic, but do not wait. Open the letter, mark the deadlines, gather your records, and choose the response that matches the real problem. Share this video with anyone who receives Social Security, SSI, survivor benefits, or disability benefits. One letter left unopened can disrupt a household budget for months. One timely response can preserve appeal rights and prevent an automatic reduction while the case is reviewed. Subscribe for more verified Social Security and Medicare updates explained in plain English. I will see you in the next video.